In this video, we're going to be talking about a dividend stock that I recently found that I honestly do believe has some upside potential. They're in a very solid market, aerospace, space discovery, defense, things like that. A lot of upside potential in this market, and the stock has been performing incredibly well, and they're about to raise their dividend, hopefully and very, very likely. So it's a good time to buy this stock at the time I'm making this video on April 18th. Could give you that potential for a nice buy before the yield increases and you get a nicer yield on cost per se. So let's go ahead and talk about the stock, and that's going to be the ticker RTX, Raytheon Technologies. They trade for about $104, and over the past month alone, they're up 5%, almost 6%. 3 months are up 15%. In the past year, they're up 34%. It's a very volatile, goes up to 91, then falls down to 80, 79, back to 86. It falls all over the place, but the long-term trend is definitely green. So it's a pretty good thing. Raytheon Technologies is an aerospace and defense company which engages in the provision of aerospace and defense systems and services for commercial, military, and government customers. Now, they have 4 segments of their company. They have Collins Aerospace, Pratt & Whitney, Raytheon Intelligence and Space, and then Raytheon Missiles and Defense. We'll go ahead and talk about these in a minute, but looking at some key things about the company, their dividend yield is about 1.96% on forward, but with this increase, we're expecting about 2.1, 2.2% on their yield. Looking at things like that, a market cap about $155 billion, a PE of 21.68, and an earnings per share of $4.81 per share. Looking at the dividends, they have some, I don't want to say average, but decent grade. The growth is, some would call this slow, 4.19%, but you got to work with it. COVID, there's a lot of things that have happened to cause a 5-year growth rate to decrease, but they are a dividend aristocrat, having increased their dividends for the past 28 years. They have a low payout ratio of just below 47% and a payout about $2.04 per year. So one thing that really stood out to me is the company's next dividend announcement is likely to be at the end of April, around the week of April 25th, which is going to be next week. So if they do increase this, it would give them about a yield of 2.2%, which would be pretty good. Would increase from about 51 cents to 54.5 cents, something like that. And they've been paying cash dividends on their common stock since 1936 every single year, which is insane. If we go ahead and just look at the dividend history, we're seeing a lot of valid potential: A+, A-, and here we go, 51, 51, 51, 51. Potentially next quarter we could see something like 54 because it went from 48 to 51, went from 44 to 46, 46 to 48, and the trend continues to grow. So we're seeing a lot of upward potential in this stock for sure on their dividend. Now let's go ahead and talk about this. They have some very good numbers. Profit margin about 6%, operating margin about 10.5%, quarterly revenue growth 3.8%, while earnings growth is absolutely insane. Now their cash, they have about $8 billion in cash, which is pretty good. Cash flow about $6.76 billion, which is nothing to complain about. And we talked about who this company is. Let's go ahead and look at them. So this is Raytheon Technologies. We're looking at their website right now. They have a ton of different things going on. Just looking at the overall website, it'll tell you a very broad information. So if you want to get more into it, here are their businesses. They have the Collins Aerospace, okay? They're redefining aerospace. They specialize in advanced structures, avionics, interiors, and a number of things. They have 30,000 patents in force and pending is a very big number, okay? Pratt & Whitney, they design, manufacture, and service the world's most advanced aircraft engines and auxiliary power systems for commercial, military, and business aircraft. Just the list goes on and on, okay? And they are making good amounts of money. Over the past trailing 12 months, they made about $64.3 billion, okay? It's a lot of money, especially for a company worth about $150 billion. $64 billion is a great amount of money. The cash flow that we're seeing right now, very good. They just came out with some outlooks on 2022 and gave around their 2021 results. So here's the full year of 2021. They made $64.4 billion and had an earnings per share about $4.27 per share and free cash flow about $5 billion. Now, if we go ahead and look at what they just announced, they expect sales about $68.5 to $69.5 billion, earnings per share about $4.60 to $4.80, free cash flow to increase by a whole $1 billion to $6 billion, and a share repurchase of $2.5 billion worth of RTX shares compared to 2.3 billion shares, $2.3 billion in shares the last year, which is a massive thing. The company is buying back shares. One, it provides you with more equity in the company, meaning your shares are technically more valuable. And two, they're buying that money into their company because they believe in their company, which is a great sign. You always like to see companies, not always, but you like to see companies with good intentions buying back their stock and things like that. So keep that in mind. Analysts have high expectations, from $4.79 per share, as we saw. That's about the high end of their adjusted earnings per share this year. We go ahead and see it goes from the next year to $5.80, from $69 billion in sales this year to about $74.69 billion in sales the next year. So that's a lot of upside potential on the stock for sure. Huge things are saying. I currently do not own this stock. It's not because I hate the stock or anything. Like I've said this many times before, but if you haven't heard it before, I think it's important to, I made this channel to talk about stocks and talk about my investments, but just because I talk about a stock does not mean it belongs to spot in my portfolio. I just don't want to have a portfolio, if we go to my M1 pie, I just want to end up with a portfolio that I have 26 holdings in these slices. I don't want to end up with hundreds. So I keep my things trimmed. But let's go ahead and talk about RTX price targets. About 114 is the average price target, upwards of 125 and lowers of 96. We have 7 buy ratings, 1 hold. With the average price target 114, gives the stock about 8.88% upside, which is pretty solid in my personal opinion. Institutions right now are buying more than they are selling. 12.16 billion in inflow, which is buying pressure, compared to 7.74 billion in outflow, which is selling pressure. Seeing a lot bought recently, so it's good stuff. Always a positive trend on more buying than selling, except for in 2019 and Q3 of 2020. But since then, we're seeing a lot of upward pressure on the stock, which I like to see. Especially if you're trying to be an investor, follow the smart money is a great way to potentially make money in the market. It's not a for sure golden ticket to make all this money, but it definitely is a good indicator of where big analysts and big institutions are putting their money and where they see things going. So that's definitely a good sign to look at. Now, Morningstar says the stock is fairly valued about $90, so trading at about a $14.27 premium right now, which I don't think it's the end of the world per se. This was last updated October 26th of 2021. We've seen a few things happen since then. We saw their Q4, their entire 2021 ratings, their new outlook came out after this. I think this was in February, I'm not mistaken. Okay, it was January 25th, 2022. So definitely a lot of good things for this company. Make sure to leave a comment below what you think about this stock. I'm going to wrap it up for this video. Thank you for making it to the end of this one. Subscribe to the channel if you haven't already, all that good stuff. Check out M1 Finance using the link in the description down below or in the pinned comment. It'll be there. Check it out. You put some money in your account, you get money back. It's free stuff. Check out my Udemy courses as well if you want to just learn more about investing, all that good stuff. There's going to be discounts going. Check it out while you can. And again, thank you for making it to the end, and I will see you at the next video.